already June 2nd. This year has flown by. We're going to talk about the week ahead, both from economic numbers and earnings. We will review some data from Friday. But first, I want to let you know about a very special treat that will be occurring in about 30 minutes. Folks, in the last 3 or 4 days or so, we released a video with Melody Wright, who the video has done very well. I have gotten lots of questions and comments from that interview. So what I've decided to do is do a live stream at 8 a.m. where we talk about the bloodbath of 2025. We're going to go through the questions. We're going to talk about some of the metrics. We're going to give you my thoughts because I do believe, as I shared in that video, that we will have the largest crash, adjustment, decline, whatever you want to call it, in real estate. Now, we will also talk about housing, of course. We will talk about what many folks have gotten wrong over the last 5 years. I've actually prepared 3 pages of notes. So folks, at 8 o'clock, we are going to talk about housing market bloodbath 2025. We are also going to deal with some of the hater comments that came with that video. But before we do, let's talk about next week. Next week, we're going to start to get some insight into the job market. We're going to get some insight into retail sales, and we're going to see if the stagflation is still looking like a real possibility. So it starts right off on Monday. We are going to get auto sales and construction spending. Both of these indicators, if they contract, could show again that the economy is truly slowing. Tuesday, we will start to get our 3 days in a row of job reports, actually 3 out of 4 days. The JOLTS report, what is going on in job openings? Again, the job openings peaked at over 10 million. I believe the expectations is they will be in the low 8 million and show contraction again. We will also show factory orders. Again, folks, just Monday and Tuesday, we're going to get auto sales, construction spending, and factory orders. These are very much leading indicators for the economy. Are we heading towards a recession? Are we barreling towards a recession? Some of these numbers will be important. Then on Wednesday, we will get our first cut at a jobs report. That will be, of course, ADP. ADP report expectation is for 179,000. Last was 192. Again, is this a sign of good news is bad news? Is this a sign that the job market is weakening? All of these things are important. Will it miss to the downside, the upside? Will we see revisions? Again, the job market is kind of the last domino that appears to be holding the economy up. So Wednesday will be important. Thursday, we will get our weekly drumbeat of initial jobless claims. Again, last week, kind of, still at those low levels. I think it was 219,000. And then Friday, the big number of the week, we are going to get our jobs number. Expectations, 178. Last, 175. Again, remember, folks, last time when we had a number of job creation sub 200, we had more jobs and the unemployment rate went up, right? Think about that. How could that be? Well, we will see if that happens again. The unemployment rate is expected to stay below 4%, matching last month at 3.9. So again, lots of important numbers coming next week. What is going on in the economy? What's going on with construction spending, factory orders, auto sales? What's going to go on with the job market? It's a big week. Are we going to see more signs of stagflation? Are we going to see an all-out recession or a soft landing? Next week will be very, very important. Not to be outdone, we do have some earnings reports that I think will be market moving. Starts off with Tuesday, CrowdStrike. Earlier, I think it was about 3 weeks ago or so, we talked about Palo Alto Networks being kind of that leading indicator. And boy, did we get that one right. Did you see Salesforce numbers? Do you see UiPath? Again, sometimes this stuff is predictable. We're going to see CrowdStrike. What is going on with cloud security? Is this a Palo Alto Network thing or all enterprise software struggling? We're also going to get PVH. PVH, if you don't know who they are, they're a conglomerate of relatively high-end clothing. So again, this is going to be what is going on with the consumer. What is going on with the discretionary spending. Because again, folks, remember, the consumer drives the economy. You hear that all the time. But what most people don't tell you is the top 20% are responsible for roughly 60% of discretionary spending. If we see the top 20% get conservative, watch out. Watch out. So again, PVH could be, again, a conglomerate of clothing brands. They could be that indicator. Then on Wednesday, we will get Dollar Tree. Again, remember, we have kind of the top and the bottom. Is Dollar Tree still struggling? Is inflation still wrecking their income statement? Are their customers downgrading from Dollar Tree? We will also get Lululemon, kind of the opposite side. Remember Lululemon last quarter? They were one of those indicators that discretionary spending by the top 20% is coming off. They missed. It was a horrible report. Will that be backed up with another horrible report? We will find out Wednesday. And then finally on Thursday, we will get DocuSign. I think DocuSign could be an indication of what is going on in the real estate business, pending home sales, realtors, all of that. What is going on in that business? So again, lots of important stuff next week. But now let's take a look back at Friday. Again, Friday we don't do a daily financial news, although we did record a weekend wrap up with Ty. I think it's important to talk about PCE. Again, when we talk about inflation, we get four numbers. We get headline and core, we get month on month, and year on year. Three, or actually what would be eight of the nine. Was that right? No, that's not right. 1, 2, 3, 4. Seven of the eight numbers matched expectation. The only one that missed was month-on-month core actually came in slightly below expectations. It was reported 0.2 with an expectation of 0.3. Headlines stayed firm at 2.7. Core stayed firm at 2.8. We've really got to start talking about stagflation, right? Remember, when Powell was at the conference, he said, I don't see the stag and I don't see the inflation. He said that when Q1 GDP was 3.5%. And at the moment, frankly, he was right. But guess what? That has since been revised lower to 1.7. Folks, I don't know if you've checked out GDP Now. GDP Now, as of last week, I think was reporting over 3% for Q2. After the horrible numbers from last week, it has been revised lower over a full percentage point. Jerome Powell, you are looking square in the eye of at least the stag. Well, now what about inflation? I mean, we just talked about PCE. We talked about PCE core in headlines staying firm at 2.7 and 2.8. Sorry, Jerome. I think you're going to regret that quip. I don't see the stag or the inflation. This is going to go down as another quote unquote transitory comment. When are you going to learn? Folks, I don't know if you saw this, but Barron's ran a featured article talking about why Powell won't cut rates this year. Folks, we've talked about that a bunch. In fact, if you go back to some of my videos from last year, you will see that I hoped they didn't cut rates all year. We have to fix the economy, and unfortunately, we've got to get through this with higher rates for longer. I do now, as I sit here, think we will get one rate cut. Again, I am picking November, but it could equally be December. I think the economy is slowing much quicker than the economic numbers report, but we will get into that. I don't know if you saw this. This was a nasty number on Friday. It's the Chicago PMI. If you want to go to X or Twitter, just type in Chicago PMI. You will see this number. It came in at 35.4. Again, what that number is irrelevant. But when you take that number and look back at history, every single time PMI, this is 100% accurate, 100% accurate. Every time Chicago PMI had a number of 35.4 or lower, recession. Look at the chart. Just go to X or Twitter, Chicago PMI, look at some of the charts. This was the worst reading since May of 2020. You all remember what was happening in May of 2020? We essentially shut the economy down. Again, this is 100% accurate, historically speaking. I think we're starting to see retail sales kind of paint a picture. We're seeing the bottom 80% get more and more conservative. The question is, what is going on with the top 20? If you look at Gap, actually Gap and Foot Locker both last week had decent earnings. Shows that at least some consumers are still spending. I actually think what's going on is the top 20% are trading down. So instead of shopping at Nordstrom's, they're going to Nordstrom's Rack. If you look at Nordstrom's earnings report, you will see that the business unit that grew was Nordstrom Rack. Why is that a problem? Margins. You can look at Gap. That's a trade down, right? You look at all of these things. I think what we're seeing is consumers are quote unquote still spending, but they're trading down. That's what I think is going on. What else do we have here that might be interesting? Oh, I've got to tell you, I promised you folks in the school community, right? The one rental at a time school community, that I would upload the 10-week boot camp, the $1,000 10-week boot camp. Congratulations, it is now available. Now in the school community, simply by joining, you will get the 10-week boot camp. You will get the 6-hour masterclass on creative financing. You will get access to our millionaires. In fact, at 9 o'clock today, you should have a chance to interact with Jason Pritchard. Next week, you're going to get the chance to listen to Jonathan Twomley on Thursday. We also have Bo Eckstein running a small business summit at the end of the month. Folks, I'm trying to bring in the best of the best folks, give you access in a very small community so you can interact, ask questions, and get what is important to you done. Don't forget, in the school community, you can post comments. I'm doing my best to interact. We will get more and more of the millionaires there. Very, very important. Last thing we'll talk about is Ali Wolf. Ali Wolf, chief economist at Zonda. Frequently seen on CNBC, Bloomberg, quoted by Resi Club, and all of that. Chief economist from Zonda, Ali Wolf, says new construction is a tale of two cities. What do I mean by that? It means that the big builders, frankly, are crushing it. The middle and small, not so much. And frankly, folks, if you go back and look at the playlist from Lance Lambert, we called it. We nailed it. I think over a year ago, I said, Lance, we got a problem. This commercial banking crisis that started with Silicon Valley Bank and took out others is going to destroy small builders. Folks, we are seeing in this economy that the big are winning and the small and medium are losing. That is pretty much the tale that is going on across the economy. Again, folks, a lot of stuff going on. I want to tell you again here in about 15 minutes. I'm going to try something that I haven't done in a while. We are going to go live on YouTube. We are going to talk about the video with Melody Wright. We're going to break down the 2025 housing bloodbath. We're going to talk about the questions and comments, both the hateful and the polite from that video. We are going to talk about some things that we've gotten right, some things that we've gotten wrong, and I'm going to try to paint you a picture and articulate why I think a lot of people are going to miss the opportunity because they are looking at the wrong stuff. Again, folks, I've got 3 pages of notes. We're going to try to get through this in a live session. We'll see how it works out. So if you want to hear about Housing Bloodbath 2025, we will go live in about 15 minutes. Take care. Later. Bye. Oh, wait. One more thing. Let's congratulate some people. We are doing these cards. Let's congratulate Nolan. Nolan, congratulations on getting your next deal. And Sid, congratulations on getting your next deal. Folks, what are these? These are cards that we send out to one rental at a time fans who get their next deal. We also have a golden ticket, which I can't find at the moment. The golden tickets are when you get your first deal. Folks, one rental at a time, do the work, focus. Being involved in this community is the right place to be. Join school. Join school. You will benefit. There's a lot of value there. We are already at 76 students. When we get to 100, it's even going to get more valuable because we are going to keep some interviews and content only on school. Join today. Later. Bye.